This is a really significant piece of new information that we've uncovered. We do know that Shein really has been in a bind in terms of trying to get this IPO off the ground. It hasn't managed to get regulatory approval in New York or London. Now it's trying to IPO in Hong Kong, where that approval from China is all the more necessary. But what we also know is that Chinese regulators really see, Shein's efforts to sort of pretend that, I mean, not pretend, but sort of not be perceived as a Chinese company. It moved its headquarters to Singapore in 2021. What that means is, China does not get any of its taxation. China does not have oversight of the data that it collects. And we do know that these are issues that, with the regulator has held up the approval for them to go public. So, Shein really, this would be a big Hail Mary move for them. It would be a huge change to their structure moving back to China, but it might be the only way that they can IPO.
And Rachel, do we have a timetable for this? Do we know when?
We don't. I mean, we know that the talks are very preliminary. The work is preliminary. We do not know for sure that they'll move forward with it, but we do know that Shein really does not have many options right now. Its valuation in private markets has also fallen quite a bit because its business is facing a lot of headwinds. The loss of the de minimis waiver that allowed its parcels to go to U.S. consumers duty-free. That's under Trump's tariff barrage. That has really affected its business as well. So Shein is really looking for a way now to get those initial investors the exit that it needs before their business conditions deteriorate even more.